you're the kind of linchpin for everybody here in terms of use case of TCS. Why did that market interest you?
Yeah, so I'm an attorney by education, but I've spent the last 10 years in the transportation industry. And the single largest problem in the $2 trillion United States supply chain is the cost and time associated with trade finance. It's the problem that nobody talks about, right? Shipper pay terms are 30 to 180 days. And just to kind of zoom out for a second, this commercial paper, this RWA, this is good stuff, right? A lot of it's Fortune 1000 paper, right? And this stuff is all monetizing or being paid out over the course of 30 to 180 days. But if you're a 5-truck operator, you can't wait 30 days to get paid. You sure as hell can't wait 180 days to get paid. So what all of these companies do is they have to sell their invoices to third parties. These are known as factoring companies in the transportation industry. When you use the analogy of Ticketmaster, I thought that was perfect. Because everybody hates factoring companies, right? I mean, the word factoring is loathed and despised in the transportation
why?
industry.
Is it because they're disingenuous, they're corrupt?
It's because the majority of these factoring companies either are banks or they're subsidiaries of banks, and they charge usurious fees, and even to use them, you're still waiting 10 days to get paid. Whereas if we do this on chain through TCS, we're able to get these transportation companies to cash in 1 to 2 business days, 90% cheaper than any of the other alternatives that are out there now. Right. And now all of a sudden, all of these real world assets, these freight receivables, can move on chain. They can move into Web3, and there's a lot of really interesting stuff that can be done there in terms of creating security tokens, yields for accredited investors, etc. But it really is a main street use case of digital assets and blockchain.
So Mike, you were a trader, right?
Yes.
You were a trader. What'd you trade, by the way?
Convertibles.
You get converts? Okay. So you hear that, you're okay, we got this. What I heard was fragmented market, owned by central points of liquidity out of the banks. But the big thing I heard was mispriced risk premium. Meaning, you mentioned before, like about a 1.5% default rate on these invoices that the banks are charging as if it's 9 or 10, right?
Yep. So
that's an arb there, right? That should get you excited as a trader. But as a trader, you also know that those inefficiencies stay inefficient for a really, really long time. So again, why do you think that this is working or this can't work?
Well, you're tapping into a whole new, to the blockchain, to DeFi. And if you can, markets improve with better information. And that's what we're doing. We're putting it on chain. You can see who issued the invoice. You can see who funded it. You can see what pool it's in. The pool itself is a smart contract, so I can't hide the keys. I can't re-hypothecate like my prime broker would do with me. So it's just, we're tapping into a better system, a more liquid system with better information, and that should bring price discovery.
Do you need to find new buyers for that paper?
I do right now, yes, but it's 12.5% right now, or better for USDC. I think that's awfully good for.
Are those commercial buyers or retail buyers?
Right now we're not set up for retail yet, but I would like to do that. Yes, I'd like to open it up. Right now it's private, like 6 addresses, but the intent is to show the information. People can see it all. They can see who's issued it, and then price accordingly, and we should get a repricing and credit at some point.
So Node 40 does this type of analysis. Is it doing like credit analysis and to help people solve that